Hello, everyone. Thank you very much for joining us today for our educational video on Medicare premiums based upon your income. My name is Keith Knabb. I am the founder and principal of Affordable Medicare Solutions. We are Georgia's leading provider for Medicare education services in Georgia. And sometimes we get calls from our clients to say, Keith, why the heck did my Medicare premium all of a sudden jump up to some wild new numbers? And that is because of a phenomenon under the tax code and under Social Security where they tax you. They call it an increased penalty based upon your participation, but you and I know it's a tax for having income that was above a certain number. We're going to talk about that today. So Affordable Medicare Solutions, we handle all different types of Medicare plans, Medicare supplements, Medicare Advantage programs, drug plans. But we definitely teach people that Medicare is not set it and forget it. Medicare is something that you manage over time. You might get these letters from the government and you have to manage the situation. You might move, you might lose income or gain income, and things change. And you need someone on your side that's going to advocate for you to manage the situation and not get ripped off and not spend money that you should not be spending. So let's get right to the presentation today. We're going to spend about 10 minutes going over all of these topics, and then we'll teach you how to take care of it yourself with the government to get rid of these penalties if possible. It's titled High Income and IRMA. IRMA is the terminology for this increased participation fee. IRMA stands for Income-Related Monthly Adjusted Amount. It's basically a backdoor tax on high income. Just think about this. Some of the politicians wanted to say, we're not raising taxes. So what they did was they raised fees on backdoor items such as Medicare premiums. It's just a tax because it's based upon your income. The amount you may pay in addition to your standard outpatient Part B Medicare premium and your D drug premium. The Part B started in 2007 when they modernized Medicare, and then they just quickly 3 years later decided to also tax Part D in order to pay for the Affordable Care Act. That's how the government works. This tax is determined by the Social Security Administration, and they will notify you if you need to pay this IRMA penalty/tax. Now, it is based upon modified adjusted gross income. So on your tax return, there is a line item number 37, which is your adjusted gross income. Well, modified adjusted gross income, MAGI, is the total of tax-exempt interest, other non-taxable income, and the AGI on your tax return. And the Social Security Administration looks at tax records 2 years prior to the premium year to determine this IRMA. It is a rolling look back over 2 years. Well, that can change. You might retire, you might have other things happen. So it doesn't always have to be a 2-year look back, but that's the standard because people can take so long to file tax returns, into even October of the tax year, the next year after the tax year. And so the government said we have to look 2 years back, but you can avoid that. I'll show you how. So the definition of this modified adjusted gross income is your household's adjusted gross income with any tax-exempt interest income and certain other deductions added back. Determining your MAGI is a 3-step process. You figure out your gross income for the year, you calculate your AGI, adjusted gross income, and add back certain deductions. Well, this is pretty easy to do if you'll go online and look up a Magi Calculator. Then you can just plug in your numbers and not have to do this on your own. You can actually use a Magi Calculator. Investopedia at the bottom of the screen shows this information, and Investopedia also has a Magi Calculator. So this is the way that it works. They say, hey, look, if you're an individual, we don't bother you until you've had $103,000 or more of income. A couple is double that. $206,000 or more of income is when we'll start bothering you to charge you extra for your Medicare. So on the chart, you can see that it gets progressively worse. You know, once you get to 258,000, 322,000, 386,000, or 750,000 and above, it gets progressively worse on this penalty. Now, you might not always be a high income earner, but they're going to look at this and say, wow, you're fitting our target market that we're going to tax you this extra premium. And on the drug plan, Part D, they also have these same numbers, 206, 258, 322, 750, etc. And there's an additional premium under the drug program. The reason they break the drug program down separately is that some people do not need drug coverage. For example, veterans receive veterans drug coverage through the VA. So they're not going to penalize them if they don't need drug coverage. But most everybody needs prescription drug coverage. But this is the reason why the government breaks this out separately. So what does this mean for you? You receive this notice all of a sudden in the mail that your monthly Medicare Part B and or prescription drug premiums are going to go up due to this IRMA phenomenon. Well, you can fight it, and you should fight it in most circumstances by filling out the IRMA life-changing event form. We have this on file. Just contact my office and we'll send it to you, or you can download it from medicare.gov, which is or Social Security as well website, which is ssa.gov. And you can download the life-changing event form, but you have to identify what type of life-changing event is actually happening to you. Is it a marriage, a divorce, a death of a spouse? More likely, though, it might be a reduction in income because you've retired. Modified adjusted gross income might have changed between 2 years ago versus today. And they're going to ask you to provide further documentation, and you're going to submit this to Social Security for review. They're likely going to do a phone interview with you. You have to be consistent in your explanation and your storyline of why you deserve this reduction and removal of this penalty. So what might happen when you do this appeal? You know, let's find out. Well, first you have to do the form correctly. You have to put your name, your Social Security number, identify the situations, work stoppage, work reduction, loss of pension, employer settlement payments. Tell them the date that this happened. Maybe you retired in November or maybe December. Put it on there when that happened. And then you put in your tax year, your adjusted gross income, and talk about what's going to actually happen in the next year now that you're retired or you're suffering this event. So what are the possible outcomes of this appeal if you do it correctly? There is no harm in using this life-changing event form. You can use it, and you can do it every year as long as you have a decent reason why you're using it. The three possible outcomes are, hey, we agree with you. We're going to approve to have this IRMA penalty removed. Or they might say, no, we don't agree with you. We're going to deny you to have this IRMA penalty removed. Or they can meet you in the middle and say, hey, you know what? We agree that you deserve some relief, not total relief, but we're going to drop you down to a lower level of this IRMA penalty. Maybe we're not going to hit you with the worst one. We're going to meet you in the middle and reduce the penalty. And you can appeal this every year or after any impactful event like the death of a spouse or you've had a bankruptcy or something else happening. You can appeal this, okay? They're okay with that if you have a reasonable reason to appeal. And how do you pay for this penalty? How does it get charged to you? Well, your IRMA Part B penalty is added to your Part B premium automatically. So if you're receiving Social Security, they're taking your Part B premium right out of your Social Security check. And they'll just take this IRMA right out of that check also. But if you're not receiving Social Security, they're going to bill you. And then you have to pay that premium. It's really important that you do, because if you don't pay the total IRMA penalty and the Part B premium, you could lose your Part B because of mispayment or non-payment of those premiums. They are paid separately to Medicare. You must pay them even if your employer or another third party, such as a retirement system, pays your Part D premiums. Medicare treats these penalty payments the same as any other premium bills, which means that if you don't make your payments on time each month, you could lose your coverage. So take this very seriously. So I hope you learned something new today. You can always contact my office at 770-945-5261. And you can always request a copy of this presentation or ask other questions by emailing us at info@amsplans.com. Thank you very much. We look forward to serving you.